chart set up with Baird Clover. If you follow a lot of traders on Twitter, it's a ton of hype on Clover right now. So I wanted to see what this chart looked like and see kind of how I would set it up from the technicals. From a fundamental aspect, it looks like they have a lot of positivity, a great board, recent partnerships, but I thought the chart looked pretty good. So I'm just going to clear everything off. Now, from IPO to recent, looks like we made a new low. Happens sometimes, doesn't happen other times, but for a little run here, this is all irrelevant. So what I want to look at first is the low to the high. So I'm going to come in and I'm going to draw Fibonacci retracement from our low on October 30th right up to our high on January 4th. What I'm going to do next is I'm going to look for any gaps on the one-day candlesticks. So if I expand this out and let you see where the gaps are between candles, looks like we've got a small gap there. That's probably it. So I'm going to draw a box. These can often fill. It doesn't mean they have to now. It doesn't mean they have to soon, but they often fill. So I'm just going to go ahead and I'm going to mark in where these gaps are, knowing that at some point it might retrace. So one-day candles, only one gap, not bad. All right. So do I think this is going to fill now? No. Reason being, I'm seeing an Elliott wave pattern here. It's pretty evident. So I'm going to go ahead and mark that on. We're going to start with our low. We see a pretty clear wave one. Looks like we've got, at least from this view, we've got wave one, wave two, wave three, wave four, wave five, which completes a full wave cycle. In the larger frame, wave two, we came up, made wave three. Wave three is typically the longest wave. It extends the furthest. We're just going to consider that this could be wave four for a second right here. We're just going to leave our wave five up here for now. So what I want to do now is I want to go into the 1 hour. I want to look again to see if we have any gaps between candles. I can make adjustments here, make these make a little bit more sense. Attach them right to the peaks and the lows so they're accurate. So looks like that's still our only gap to the downside. Also still our only gap to the upside. So let me just attach these really quick. Go. Now, a wave retracement. This is not a complete cycle. We didn't see 5 waves yet. And if you look inside of wave 3, we've clearly got another smaller wave cycle. Looks like we've got our wave 1, wave 2, 3, maybe here, maybe here. Looks like we got a 5 to me though. Wave 4 extended down. This can't be wave 4 because it touched into the top of wave 1. Just take that off for clarity. Now, retracement wise, we use it within the wave that is completed. So I'm going to move this, sorry, not that. Move this to the bottom of wave 2. Fix this real quick. Now what do we see here? We see a bounce, and the bounce that we saw was above the 618. In Fibonacci retracements and projections, the 618s are always the strongest levels. Generally speaking, we'll bounce on a 618, the 65, and the 618. This area between it's the golden pocket. So if it breaks the 618, monitor the 65. I'm just going to make sure that I've got this accurate to the bottom of our wave. Looks like I'm slightly off. There we go. These don't have to be precise, but they should be close. It gives you a good idea. So anyway, all of our 1 hour candlestick bodies, we closed above this 618. So if I zoom in again, I want to look at what we're doing currently here. Attach this. So that's our low. And to me, it looks like from the bounce, we have a pattern. The first wave 1 can often be what's called a leading diagonal, meaning that wave 4 can retrace into the top of wave 1. So I'm just going to mark this out real quick. Looks like that'd be our wave 1, 2, 3, 4, 5 for a high. What happens after that? We see an ABC down. 5, A, B, possibly C. we could go lower. Now what do I see here? I see a little mini gap. If I expand this up right here. So this jumped from 1355 to 1356. Tiny gap, may or may not fill. I'm gonna mark it anyway though. 96% of gaps fill. If we're close to the gaps, they want to fill, they act like a magnet. I'm just gonna make this red. That way I know that it's a down gap. I'm not sure if I did that on the first one. If not, I will correct it. So that's there. We know that it could hit there. I already started a position on this because I like the pattern. I like the fundamentals. There's a lot of hype. If volume comes in hard, this should go up. So I just want to double check and make sure. Was our wave forward ABC? We have a zigzag down, that would complete A, a zigzag up, that completes B, down to 4, that completes C. Now, more often than not, the trajectory of A is sort of parallel to the trajectory of C. C can often be a little bit less aggressive, but it's often longer. It doesn't have to be, but it often is. So now, if this is our bottom, where do I think this is going? All right, so now we're going to draw a Fibonacci projection. So we're going to start from our high and go to the low. I'm going to change this to teal because green is signifying upward. It's a shade of green. Now, more often than not, a wave 5 tends to go to the 1.236 or the 1.618. So I'm just going to adjust this 5. We'll go conservative. Call it the 236 here, 123.6%. Is where I believe that could go. All right, I'm just gonna change this to red, like I said. Okay, so I'm gonna take this one off for now because we've already completed that, in my opinion. If we do make a new low, what I would expect to see is some RSI divergence. That would mean that while the candlesticks do make a new low, hypothetically, if we made a new low here, call it like that, what I would want to see on these candlesticks is that this is still high. So I do think we could come down more, maybe not. If we do, I'll add to my position. If we do, I'm going to watch for RSI to spot a divergence and see if it goes back up. So now time frame wise, how long do I think it's going to take to get up here? Well, it's one way to do that. You make a pitchfork, go from the last completed wave to the top, the bottom of the next wave. Conservatively speaking, buying yourself time, you could expect our wave 5 should hit at least the 1.236 probably by February 11th. Now I know there's February 19th calls, I know there's March 19th calls. I took March 19th because I always buy extra time. If the move happens faster and you do have extra time, you have less theta decay that are eating your contracts. Now, I don't think that it will take that long. Wave 5 is generally the steepest and fastest wave. So more likely than not, could be something like this, might be something like this, could go up here. All these would make sense. Entering at this level though, we've got the ability to keep a pretty tight stop loss. This should not ever go lower than 1 because our 4 should not go into 1 on a major cycle. Since it's been going down, I'm also noticing that volume has been going down. That's good for us. If it was going up and volume was going down, it might indicate a reversal. So my opinion, and the reason that I took March 19th calls, what I usually do is I just put a mark on my chart here of where my call expiration ends, which is March 19th. So I'm just gonna put that there. I have all this time. So my goal here is to come from the 13 area. I believe I bought a $15 strike. When I bought this originally, we were about 14, so it was close. The other option was a $12.50, I believe, which was way in the money. That would have been safer, but I think this is very good chance of going up. A little bit higher reward does make things harder to keep track of because the $1 does not translate to 100 because delta is not 1 when we're talking about an out of the money option. However, once it's past 15, every dollar increase in the ticker will be $100 per contract. I am in 10 contracts. Hope that makes sense. Let me know if you guys have any questions. Thank you.